Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the week ahead analysis video. We're going to highlight some of the news this week and some of the charts of interest. So we do have quite a lot of data out this week in terms of high impact red letter data, and a lot of it's to do with the US dollar. And we can see here we have for instance the CB consumer confidence, but then we have a lot of non-farm payroll data, starting off with the ADP non-farm, but then have obviously prelims, things like that. But really speaking, I think that is going to be overshadowed by Federal Reserve Chairman Powell speaking on Wednesday. Investors are really going to just keep an eye and see if there's any clues about what will happen in the December meeting. Obviously, we've had a lot of clues to suggest that the interest rates are going to come down in terms of slowing the pace of the hikes. So the Federal Reserve will hike interest rates, but not as aggressively. I think we're pretty certain on that, but obviously nothing is 100%. So it'd be interesting to see if Federal Reserve Chairman Powell continues that dovish tone in the market and continues to drive that dollar to the downside. And then have other US data, ISM manufacturing PMIs, but I think after this we're going to turn our attention to the average hourly earnings. You can see here that we are forecasted to move from 261,000 jobs to 200,000 jobs. So we're seeing a decline again in the US data, which could then have a knock-on effect for the dollar to continue that downward pressure. In other news, we have a lot of central bank speakers. We've got the Bank of England Governor Bailey speaking. We've got the RBA Governor Lowe speaking. And we also have the RBNZ Governor speaking. So lots of central bank speakers. So a lot of volatility around those currency pairs. Going on to the strength meter then, what's quite interesting about the strength meter is that the US dollar has remained pretty flat for 3 weeks, despite us seeing the downside. It is the weakest currency at the moment, but it's a bit flat on the strength meter at the moment. So that's quite interesting to see. If we did see any kind of dollar spark it here, that would have been interesting to see if the dollar would reverse. But I think at the moment we're more likely to see some short-term downside in the US dollar. Kiwi remains the strongest currency, and then everything else is just pretty much in the middle, apart from CAD, which seems to be on a little bit of a lower path there. So I'm going to kick it off with Euro US dollar. Nothing's really changed from our previous videos on Euro US dollar. We've got a couple of key levels above and a couple of key levels below that we really should be keeping our eyes on. I think if the dollar is going to continue to weaken this week, then we're going to see price potentially trade back to the 1.0500, even the 1.0600, dependent on how volatile the market could be. I think if we saw a jump into the 1.0600 where we have this trend line resistance, then price could come down from that area. Alternatively, price could trade down to the 1.0225, and if it trades through that level, then we're probably going to see price come down to the 1.0100. If, however, we start to find some support here, there could be an option for a little bit of a bounce to the upside. Okay. Moving on to pound US dollar. Pound had a great week last week, continued to push higher. If the Bank of England remain positive, then price could be above the 1.22 handle this week. And I think if we're trading above the 1.22s, the likelihood is that we're probably going to trade to the 1.26 handle next. If, however, we do find some resistance at 1.22, we do have some downside support, be it at the 1.2 level or the 1.17, where we do have a bit of a trend line support running through there as well. But everything's looking more to the bullish side here for pound US dollar. Going on to Kiwi US dollar then. So Kiwi, the strongest currency, dollar the weakest. Makes sense to have a look at this market, see what price is doing at the moment. You can see that we're trading into new higher highs, higher lows. If that path is going to continue, then price may want to find some support back at the 0.6150 handle. If we were to see that, then I'd expect price to maybe go and head towards this area here, which is 0.6450. If we trade through that, we've got the highs over here for 0.6550 to contend with. Finally then, on gold, we can see that gold has traded through that big trend line, resistance through here. We're trading above the $17.25 handle, which is above the highs in here. Again, dollar weakness playing a big part in how gold is moving to the upside. So if we do see that dollar continue to weaken, then the likelihood is that prices of gold may rally up towards the $1,800 level this week. Once we've traded through $1,800, that opens the door then to $18.75. However, if the dollar strengthens for whatever reason, then $17.25 could be the area where price breaks through, finds resistance and continues lower, with $16.25 being these lows. More favourable to the upside, I think, here for the dollar though, and the price of gold. So I'm going to leave it there. Hope you enjoyed this video update. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.